Features of Best Investment Options 2023. Let us quickly understand the details of the best investment plans with high returns in India in 2023. National Pension Scheme, NPS. NPS is one of the best investment options backed by the government that offers guaranteed pension solutions. The NPS fund invests in bonds, government securities, equity, and other investment alternatives as per the investor's preference. Features of the National Pension Scheme, NPS. Lowest administrative and fund management charges. Allows partial withdrawals of funds. Provides financial independence post-retirement. Post Office Monthly Income Scheme, POMS. The Post Office Monthly Income Scheme is another investment option that helps you save money each month. It is a GOI-backed scheme regulated by the India Post Department. Features of POMS. Facility of individual and joint life account with 2 or 3 persons. Minors, greater than 10 years of age, can open an account under their name. Separate investment limits for an account opened as a guardian of a minor. Offers monthly income in the form of interest payable at 7.1% PA per month. Public Provident Fund, PPF. Being a government-backed scheme, Public Provident Fund, PPF, is one of the best investment options in India. It guarantees returns on the investment while keeping the funds safe. Features of Public Provident Fund, PPF. Can open an account at any nearby bank or post office branch. Loans on PPF available after continuous investment for 3 years. RBI Savings Bonds. RBI bonds are high return investments that are available to all citizens, except NRI, in India. The returns are accredited to the investor in demat mode in their bond ledger account, BLA. Features of RBI taxable bonds. Bond applications are to be submitted at 1,600 RBI designated agency banks and SHL branches. The bonds are issued at a face value of 1,000 rupees. No upper limit to investment. Non-transferable, non-tradable in stock exchange, and can't be used as collateral to raise loans. Interest payout semi-annually at 8% PA. Bank fixed deposits, FDs. Bank fixed deposits offer fixed returns over a specific investment tenure. With consistent returns over time, it is one of the safest investment options with high returns in 2023. Features of bank fixed deposits. Online process to open, maintain, and renew policy. Profits payable on monthly, quarterly, half-yearly, or yearly basis. Direct equity. Direct equity investments are buying the market-linked stocks/units of a company listed on the stock exchange. Although equities carry high risk, the returns offered by these funds are higher than any other investment option available in the market. This makes direct equity one of the best long-term investment options with high returns. Features of direct equity. In legal terms, the investor is buying the ownership of a company in proportion to the stocks. To invest in a direct equity fund, the investors need a demat account. Mutual fund. Mutual funds are the best way to invest money in a disciplined manner. It invests in market-linked financial instruments such as equity, debt, stocks, and money market funds. The returns are generated as per the market performance of the fund. Features of mutual funds. Offers high returns over the long term. Allows you to hold a diversified investment portfolio. Help you maximize your profits and attain investment objectives. Gold ETF. Gold exchange traded funds are the best financial instruments for high investment returns. It aims to trade the stocks/units of gold bullion in paper or demat and track the changes in the domestic gold market price. Features of gold ETFs. Offers high asset liquidity, which can be easily traded on the stock exchange. Used as a security to obtain loans instantly. Real estate investment. Real estate is one of the fastest growing and high return investment sectors in India. It holds great prospects in different sectors such as retail, housing, manufacturing, commercial, and hospitality. Features of real estate investment. Investments in real estate have a high tangible asset value. Offers a portfolio with low volatility and high returns. Real estate investment trusts, REITs. A REIT offers one of the best high investment return. Under this, a real estate investment-based company owns and manages high-value land assets and properties. It mortgages these assets to generate income and distribute them among the shareholders. Features of REITs. The income and dividend for the stakeholders are the profits generated from the appreciated value or rent collected from the real estate. Both small and big investors can invest their money in stock exchange trading. Cryptocurrencies. Cryptocurrency is digitally encrypted money that is stored on an online ledger or blockchain. It is widely traded across the globe today. It does not require any third-party entity like bank or central institution to complete the transaction between two individuals. Features of crypto investments. From April 1, 2022, cryptocurrencies and other digital assets are taxed at 30% PA. Cryptocurrency market is highly volatile and offers highest risk for highest rewards. Absence of a crypto regulatory body makes it necessary for all individuals to understand and evaluate investments regularly. Corporate bonds. Corporate bonds are debt securities issued by corporations to raise capital. In India, corporate bonds provide investors with an opportunity to lend money to companies in exchange for regular interest payments and the return of the principal amount at maturity. Features. Investment period, typically 1 to 10 years. Suitable for investors seeking fixed income and lower risk. Risk level, low to medium. Returns, fixed interest payments. Government bonds. Sovereign bonds, alternatively referred to as government bonds, encompass debt securities issued by the Indian government to fund public expenditures and regulate fiscal shortfalls. They are generally regarded as a secure harbor for investors in search of reliability and income. Government bonds come in various durations and can be acquired either directly from the government or via authorized intermediaries. Investment period, long term. Suitable for risk-averse investors looking for stable returns. Risk level, low, considered safer than corporate bonds. Returns, fixed interest payments. Index funds. Index funds are investment instruments designed to mimic the performance of distinct market indices like the Nifty 50 or the BSE Sensex. This is achieved by maintaining a diverse collection of securities that mirror the composition of the index. Operating on a passive management approach, these funds aspire to mirror the index's performance rather than striving to surpass it. Index funds facilitate diversification across numerous sectors and stocks, granting investors the opportunity to partake in comprehensive market trends. Risk level, low to medium. Passive investment strategy, lower expense ratios compared to actively managed funds, diversification across multiple stocks within the index. ETFs, exchange-traded funds. Exchange-traded funds, ETFs, are investment funds traded on stock exchanges, resembling individual stocks in their trading nature. In the Indian context, ETFs present investors with the chance to access a diverse array of assets, encompassing equities, bonds, commodities, and beyond. Engineered to mirror the performance of a specific index or sector, these funds furnish investors with a convenient avenue to diversify their investment portfolios. ETFs amalgamate the advantages of mutual funds and individual stocks, providing a blend of liquidity, flexibility, and transparency. Risk level, low to high, based on the underlying assets. Returns, reflect the performance of the underlying assets, for example, stocks, bonds, commodities. Diversified across multiple assets, intraday trading possible, lower expense ratios compared to mutual funds. Peer-to-peer lending. Peer-to-peer lending, often abbreviated as peer-to-peer lending, represents a type of debt financing that establishes a connection between individual lenders and borrowers via digital platforms. This mechanism enables individuals to extend loans directly to fellow individuals or small enterprises, circumventing the involvement of conventional financial intermediaries. Operating through peer-to-peer lending platforms, a marketplace is created where lenders have the opportunity to examine borrower profiles, evaluate credit risks, and choose loans in accordance with their preferences. Suitable for investors seeking alternative fixed income investments. Risk level, medium to high, based on the creditworthiness of borrowers.